The South Korean economy rebounded in the first quarter of this year by 1.7% compared to the fourth quarter of last year to mark the highest quarterly expansion in over 5 years. We tell you how. Hope your work week is off to a good start. It's Monday, April 27th here in Seoul. I'm Min Sun-hee. We start our session this week with some optimistic economic news here in South Korea. For more on this, I have Celio Fioretti with French daily Croix here in the studio. Celio, welcome back.
Glad to be here.
I also have freelance journalist Yang Chien-Hao with us. Chien-Hao, it's great to have you here.
Hello, thank you for having me in this fruitful day on the stock market.
Indeed, indeed. And before we touch upon the stock market, Celio, perhaps you could start with details about South Korea's first quarter economic growth.
Well, it came out much stronger than expected, showing a real rebound after a weak start of the year. According to the Bank of Korea, GDP grew by 1.7 quarter-on-quarter, which is quite significant. It's the fastest expansion since 2020 and a clear turnaround from the previous quarter contraction. On a year-on-year basis, while we don't have the precise headline figure, the underlying data is that there's a very strong annual momentum, especially driven by export and industrial output. Now, in terms of what really fueled that growth, the key driver here is very clear. It's AI and semiconductors. South Korea is a heavily export-dependent economy, and we saw exports rise by about 5.1% in the quarter, with semiconductor shipment surging more than 100% compared to last year. To a year earlier, and that reflects a global booming demand for AI-related chips, which are the new trend of semiconductor, with companies like SK Hynix reporting massive profit increases. On top of that, there's also a solid investment growth, both in construction and facilities, and also a modest pickup, but still quite improving pickup in the private consumption. But this is important. The growth is quite narrowly based right now. More than 1% of GDP growth is just from the semiconductors and those AI chips. So it's still very vulnerable to cycle turns. If the trend were to be somewhere else, Korea would have a time to catch up with that new trend. And there's already maybe warning sign with the rising oil prices. Might be the crisis might be there to stay for a long time. So there's a good rebound, but we have to be still a bit cautious, I would say, for the future perspectives.
Right. Chien-Hao, in the meantime, as Celio just mentioned, SK Hynix saw its profit soaring to an all-time high during the first 3 months of this year. Do tell us a bit more.
So over the past 2 decades, we know that the memory chip industry in the world was largely being dominated by Samsung Electronics. But in the last 2 or 3 years, we've seen the rapid rise of SK Hynix, mainly because it's the world's first company to develop and mass produce the high bandwidth memory, so-called HBM. And if traditional DRAM is like an ordinary road or street, then HBM can be regarded as the highway, the expressway of memory technology. And in fact, when HBM first debuted in the second half season of 2013, it drew a limited market attention because of its high cost, high price. But within the explosive growth of AI demand in recent years, like Celio just mentioned, the demand for memory capable of processing massive amounts of data at high speed has surged. And that has made HBM increasingly critical for the AI chips and data centers, driving sharp gains in both SK Hynix earnings and stock price. And for the first quarter of the year, SK Hynix reported revenue of 52.58 trillion won, about $35.5 billion US, roughly triple from a year earlier. Operating profit came in at 37 trillion won, up fivefold year on year, and actually started investing in the stock market around this time last year. I still remember when SK Hynix shares were trading at 18만 2천 won, 182,000 won, and they are now around like 1.2 million won, a 5.7-fold increase. Honestly, part of me regrets not buying more back then. If I had gone in heavily, I might be financially free and I can stay at home and like lying all the time now. And as many of you know, like since late last year, the AI boom has dramatically boosted the memory demand, and it has even given rise to a new term in the market, so-called chipflation. We have discussed about that before, reflecting how both conventional DRAM and HBM have become almost as expensive as gold. And SK Hynix says that while the first quarter is traditionally a seasonal slow period of the year, demand remained robust this year thanks to the expanding investment in AI infrastructure. And the company also adds that as AI evolves from large model training toward real-time inference across border service environments, what the industry calls agentic AI, memory demand is expected to keep rising and growing.
Right. Celio, as Chien-Hao just mentioned, the local bourse, it's been noting a remarkable performance in recent times, of course. Even today, it marked a major milestone in terms of total market capitalization. How are analysts explaining the rally here in the local stock market, despite the unrest in the Middle East?
Yeah, it might seem counterintuitive with the war in Ukraine and in the Middle East, but we see this rally in the South Korean equities actually the result of a combination of structural and cyclical factors. So first, there's what many call buy the dip dynamic. When the Iran-related tension escalated earlier this year, the KOSPI actually plunged sharply, more than 18% on the first day, but that sell-off was seen as overdone, and as soon as fears eased slightly, investors rushed back in, triggering a strong rebound. And second is what we just mentioned before, the semiconductor super cycle that is now trending. We see companies like SK Hynix, booming demand, so that also fuels a lot of investments. And the third factor, I would say, is more on the domestic side and even like political side. Since President Lee Jae-myung took office, the government really pushed corporate governance, the change aimed at reducing the so-called Korean discounts, and measure like limiting duplicate listings, have improved investor confidence in the Korean market, especially among foreign investors. So there's all of those three factors playing up. And finally, there's also a bit of a global attention gap, I would say. While global headlines were focusing on Iran, on Ukraine, the strength of Korean market has gone relatively under the radar. People didn't pay much attention, which paradoxically helped sustain a very stable inflow of currencies and investment without overheating the market too quickly, even though it is really rising well. So in short, what analysts see is that this rally is not against the global turmoil and the oil crisis, but it's partly because of it. And Korea found a good way to have more opportunities through the crisis, with still like strong fundamentals of the Korean market, which is tech and export-driven products.
Right. Chien-Hao, Bloomberg says that AI chip demand has raised South Korea as well as Taiwan in global equity rankings. How high do these two countries stand, and what are the broader implications of this reality?
So as AI drives an explosive surges in memory demand globally, the beneficiaries in South Korea have been Samsung Electronics and SK Hynix, and in Taiwan, the key winner has been TSMC, of course, because South Korea's HBM chips are ultimately shipped to Taiwan for advanced packaging and back-end processing by TSMC before being delivered to their end customers. And then the AI boom has also fueled strong performance in both South Korean and Taiwan stock market. This year, even today, both have hit record high. And South Korea's stock market capitalization stood at 2.83 trillion US dollars, ranking an 8th globally, while Taiwan's reached $4.14 trillion, ranking 6th in the world. And much of that growth is now being driven by heavyweight technology stocks as AI technology continues to develop and spread. And Asia is further cementing its central role in the global economy, even amid external risks such as tariff and the conflict involving in Iran recently. But still, we can see that the growth is still ongoing. Another notable trend in the market is the growing participation of retail investors in both South Korea and Taiwan. Like me, we do some stock market. Beyond institutional money and large overseas funds or capital, local individual investors are playing an increasingly role recently. For example, in South Korea, retail investors are often nicknamed as ants. And many students and parents we saw like they are participating in the stock market, hoping to build funds for future, for example, family needs or entrepreneurship or retirement. And as AI adoption explodes recently, more people are recognizing the trend and stepping further into the market recently, and domestic investigators are becoming increasingly influential forces across the Asian financial market. And still, some analysts warn of the concentration risk. In South Korea, KOSPI is heavily dependent on Samsung and SK Hynix, which together account for roughly 42% in the index. The same thing happened in Taiwan, which TSMC alone makes up about 40% of the Taiwan capitalization weight stock index. So with the technology stocks carrying such dominant weightings, both markets are becoming increasingly reliant on the narrow group of companies and mostly AI or technologies, raising concerns about heightened vulnerability if the sector turns.
Right, and speaking about retail investors or individual investors here in South Korea, quite a number of them are reportedly choosing to expand their U.S. equities. Could you tell us a bit more about this phenomenon, Celio?
Yes, that's quite the most striking trend these days. Even as the domestic market rallies, South Korean investors are increasingly looking outwards, and especially to the U.S. market. In fact, South Korea has become the one of the largest buyers of U.S. equities globally, with about $73 billion net in purchases in 2025 alone. It's more, nearly 5 times more than the year before. And a big part of that is what we call here the end investors, the small retail investors. And these are people who are driven by a desire to shift their portfolio to an overseas market. What's interesting is that it's happening despite a strong performance here in the local domestic market, the KOSPI, but maybe because they see the U.S. market as a more profitable and more stable in the future. Maybe the too fast rise of the KOSPI is scaring them. They might feel maybe the heydays are today, but maybe will fall back again later. So they see the U.S. market as more stable. And there's a few reasons for that. First, there's historical performances. The U.S. indices like the S&P 500 have outperformed Korean stocks in most recent years. So there's a perception of maybe more consistency in the U.S. market. And second, also corporate governance and shareholders in return. U.S. companies are generally seen as a more transparent and more shareholder-friendly with dividends, buybacks, and a clearer communication inside the company. So that also could attract, and also just people want to diversify their assets. They don't want to put all their eggs in the same basket. With the very fluctuating world these days, a lot of instabilities, they want to have at least, maybe if it fails in Korea, it might succeed in the US. So they want to balance their loss and try to diversify as much as possible their portfolio to ease their loss. And as Chien-Hao said, the goal for them now is more to build a future for their families, maybe buy estate later or assure like a financial freedom. So that's a good way for them, they see it, to also buy in the US market.
Right. Moving forward, Chien-Hao, last week the Bank of Korea ushered in its new governor, Shin Hyun-song, who shared some of his plans while he will be in office, of course. What can we expect?
For the past 4 years, the governor of Bank of Korea was Lee Chang-yong, and following the end of his term, economist Shin Yong-sung took over as the new governor just last week. And in his inaugural address, Mr. Shin said he plans to push for the internationalization of Korean won, and the Bank of Korea will also work with the government to promote a 24-hour foreign exchange trading system and an offshore won clearing framework, measures aimed at making the Korean won easier to use overseas around the world. However, the broader environment now remains highly challenging, as we know that despite the strong performance of Korean equities, the stock market, the Korean won itself is hovering near the 17-year low of around 1,500 won to the US dollar. Rising oil prices also adding the inflationary pressure, while population decline in South Korea continues to erode the labor force. Mr. Shin himself acknowledged those risks, saying that the geopolitical tensions in the Middle East remain severe and global oil prices are still significantly above pre-war levels, and uncertainty persists around global trade conditions as well as the monetary and fiscal policies of major economies. So as a result, he warned that South Korea itself is still facing rising inflationary pressures alongside increasing downside risks to growth. He added that amid heightened economic uncertainty, maintaining the price stability and financial stability will be the core priorities guiding monetary policy, with the aim of supporting steady economic growth. Attention now turns to tomorrow, April 28th, when Mr. Shin will chair his first monetary policy board meeting, and markets will be watching closely for what signals he will send, because the biggest factor shaping the Bank of Korea next move remains the Federal Reserve in the United States. The FED is widely expected to hold rates steady for a third consecutive meeting at the end of this month, while in South Korea, markets likewise expect the Bank of Korea to keep its benchmark rate unchanged for an 8th straight decision. So at this stage, there is little space for the Bank of Korea to maneuver.
Right. In the meantime, Celio, what more can you tell us about the current state of the South Korean currency, the won, and the country's foreign currency deposits, that is?
Well, the picture now is a picture of pressure on South Korean economy and a currency, and a very sharp reaction from companies holding foreign currencies. The Korean won has been significantly weakening, moving from around 1,440 per dollar in late February to now 1,530 by the end of March. So that's a notable depreciation in a short period of time, largely tied to global instabilities, especially rising oil prices and safe haven flows into the US dollar. So now what's really interesting is how companies have responded to that. According to the Bank of Korea, foreign currency deposits dropped by a record $15.4 billion in March, bringing the total down to about $102 billion. And that decline was overwhelmingly made by corporate accounts, not households. And what firms are essentially doing with this is that they're taking advantage of a weaker won, converting the dollar holding back into the local domestic currency, and that allows them to settle some payments, manage tax, and rebalance their finances to have a more favorable exchange rate. And dollar deposits alone fell by over $10 billion, with euro and yen holding also declining. So this is a broad-based shift across currencies and sectors. And at the same time, there's still, of course, an underlying demand for dollar, and especially given Korea's heavy reliance on energy import. So while this conversion may temporarily help support the won, the broader pressures, the oil crisis, the international instability still remain real and pretty much in place. But so overall, you have a weaker currency environment combined with a tactical response by the companies rapidly adjusting their foreign currency holdings to navigate that volatility of the market these days.
Right. Also on a cautious note, Chien-Hao, the OECD has forecast that South Korea's potential growth rate may decline to 1.7% range, that is this year, and it fall even deeper next year. Could you tell us a bit about this particular outlook and the reasons behind it?
Yes, while we see the market, the stock market is doing really well, but the broader economic growth remains far less encouraging. When what economists call the potential GDP growth refers to the fastest pace an economy can grow without triggering the inflation, and it is widely seen as a measure of countries' underlying economic strength. And South Korea's potential growth rate is projected to fall from 1.92% last year to 1.71% this year, a decline of 0.21 percentage points, and that would mark the 16th consecutive annual decline in South Korea's potential growth rate since 2012, when it stood at 3.63%, and making the country one of the few in the world facing such a prolonged structural slowdown. And business leaders and academies say that this trend reflects unresolved structural problems, including an unprecedentedly low birth rate in Korea, great population aging, getting old, and an industrial structure overly dependent on a narrow range of sectors such as semiconductors, as we mentioned. And another closely watched indicator is the GDP gap, calculated by the subtracting actual GDP from potential GDP and dividing that figure by potential GDP. South Korea's GDP gap has remained in negative territory, suggesting that the productive resources, including industrial capacity and labor, are not being fully utilized.
Right, unfortunately, of course. But on that cautious note, I'm afraid we'll have to end today's talk. Chien-Hao, as always, thank you so much for your time.
Thank you. Hope we can have financial free and sooner or later.
Right, fingers crossed for that. Celio, thank you so much for your insights.
Thank you.
Right, and that ends Monday's edition of Press Perspective. We return same time tomorrow with more panel discussions, so do join us then, and thank you for now.